What's going on, everybody, and welcome back to another episode of a trade recap. Today we hit pretty big here in the open, about 55 handles right at open, pretty much one and done of calls, texted, and executed right in front of you guys. We're just going to break down from top to bottom what we call our one setup for life, which is the TRIL model, which stands for time, rate, inversion, liquidity. Now, if you guys on the outside and not inside of the Discord, either our paid or our free community, and you're trying to rework this, I just want you to realize that the TRIL, the TRIL model, is only for 1 minute entries. The lower time frame without the context of the higher time frame is nothing. In fact, the lower time frame delivers the objective of the higher time frame. So always remember that, whether it's TRIL, ICT, supply and demand, the highest time frame narrative is where you need to have your focus. So coming into today, this was our analysis here. This right here is your daily internal draw. We have a draw of liquidity higher, and because this is your internal draw price from this low to that high, this is your leg of expansion, right? From that leg of expansion, we enter a leg of retracement. And in that leg of retracement, in that area of expansion, usually around the 50% or the 20% or as low as the 6.8, in that area, we're looking for price to gravitate towards something. That something is the daily busy. This daily busy was hit. So alternatively speaking, this high is your external liquidity. This day here, price almost delivered it, but did not deliver it. So we're still going to be looking up. From the daily chart, we're going to go to the 1 hour chart, and this is in replay mode. We have a live execution to show you as proof of execution here, so sit tight. But coming into the day, this red candle hasn't happened yet, but replay mode, since we're in the time zone of 9 a.m., it's going to give you the full 9 a.m. candle, so just ignore this candle for now. But if you look at this chart here, and you zoom out, you see that we sweep liquidity into the higher time frame BISI. That means these relative equal highs are going to be your draw of liquidity. Why these two highs? They're both relative equal highs. In addition to that, this is the same external draw. 1 hour trend shifts. You get this low, and this is the high that puts in the low. You actually broke that and then pull back into the 1 hour BISI, respecting it. Price goes higher, higher high, higher low, and so forth towards the draw of liquidity. So coming into the day, I'm extremely bullish. Like there's nothing you could do or say to me that could change my mind because of how clean this chart was. Going down to a 15-minute chart, just trying to map out some execution levels here. Again, this blue line up top, this was our target and draw of liquidity. 15 minutes looking extremely bullish here. Here's your area of interest, which would be these PD arrays here. I'm going to mark these off as the 15-minute BISI. And since we have this low and that high, this area here becomes an order block. This whole area here is an order block of interest. Okay. So going down to a 1 minute chart. Just want to zoom in for you here before we get going. Looking at this 1 minute chart, I see that this sweeps, and we know in this area here, there's a 15-minute order block, and below that you have this BISI. I don't want to draw out the order block because it's going to make the screen kind of tight. So mark out your macros. We know that the 930 area here. Sorry, this is the 930 area. And then we have the 940 area. This is a concept that I use, and I've not seen too many people use this as well, but that 20 to 40 macro into the open, the last 30, that 930 to 940, if you have a clear draw, this is a lot of times where this will be delivered, right? So again, let's go ahead and fast forward to this area here. Right? And what's going on here? We're sweeping these lows. So that makes my prime target this high here. So from these lows, because again, this becomes a range with that move down, this high and this low, and then you sweep these relative equal lows. So there's 3 of them here, basically. This one, and that one. So you sweep all 3 of these lows and start to wick up. So for me, I'm looking very bullish here into the open. In fact, here is my potential inversion gap. It's not an inversion gap until price gets above it. Once price is above it, then we can look at this as being a inversion gap. So the expectation coming into the open is for price to come up, pull back, and then deliver at least the low hanging fruit, which is the range high, because this is the range low, range high, and then go to that relative equal high. This is what I was calling out today. This is what we executed on. So here comes the play. So price, look at all the wicks. Here's the opening right here at open. And let's clean this up here. You get the close above. Now, a lot of the IFVG traders do is they like to buy directly on the close above. There's a certain situation where I will buy on the close above, but for me, I mainly wait on the retest. It gives me a better entry. Next candle comes in. All right, this is your retest candle. Very aggressive candle, but this is your entry. We're going to target both of these highs here. We're going to put the stop at the low. And when you take a trade like this, because look at the RR. The RR here is 3 to 1. So if I'm risking $100 to make basically $300, right? So I'm quadrupling my risk here, right? So when you have a trade like this and you have so much R on the table, you need to look at how much of the stop loss are you willing to take. And as a trader, you need to understand some plays that align perfectly with your model, you're going to throw some size on it. And obviously you're going to have to compare your recent performance, right? So if you're on a 6-7 win streak and you're hot and you get this perfect setup, you can throw the size on it to take that trade, depending on where you're at. Now, if 20 points or 50 points is too wide for you, then size down. Also, you don't have to trade the actual mini contracts. You can also trade the macros, the MNQs, and that will actually save you a lot more than you throwing too much size on, especially trading in this particular macro. This particular macro is the 930 to 940 opening drive macro. That macro, you're going to see extreme volatility. As you already seen, price went up, already came down, never closed below the IFEG. Now, how do you manage risk here? How do you put a stop loss here? I put my stop loss at the swing low, but if price closes below the IFEG and it's not an A plus setup, I'm getting out. If it's an A plus setup, something very clean like this, I will wait for stop to take that low. Everything has to be in the line like it is right now. So let's see how the trade does. Trade goes down, comes back into it, delivers our first target, delivers our second target. Now this trade was called in the chat room. Again, we live stream every day. We execute in front of you. Everything you really need to consider this a handhold and walk you through this whole process. Now, this is the free chat room that you have access to. I just wanted to play this. Okay, cool. Here's today's execution. Same play, same gap. Boom. That's the execution. We're long right here. In the play, stops at the bottom right here, as I just outlined. Targets are up top. This is the low-hanging fruit to the left. We did scale out on the way up. Price holding this 21 EMA. So here we go. Here's delivery to our low-hanging fruit. That's your target 1 hit, and price immediately went for target 2. Beautiful day. Trading the same system over and over again, executing it in front of you, showing you the results after it. Trade by trade, brick by brick is how we built this. Now, with that being said, if you guys have any questions around the TRIL framework, we have both a free community that we have everything that you really need to get going, and we also have our premium community where we live stream trade and walk you through the process each and every day. Besides that, I want to thank all of you guys for your support, and I'll see you guys on the next stream. Be easy to everybody.